In this video, we'll discuss the concept of an edge and why we need it to be successful in the market. We discussed the law of supply and demand in the previous video. We discussed how large buyers and sellers move the market and how we rely on their initiatives and decisions for profits. The market is always changing, making it difficult to predict exact movements 100% of the time because there are so many different buying and selling initiatives happening. This is why it is critical to accept that we cannot win 100% of the time. Non-acceptance of this is what leads traders to lose their accounts, to blow their accounts, to lose the challenges, to blow their funded accounts. So we must first accept this principle, but we can still make money. We can make money by having what's called an edge. And this is a concept that is very challenging for beginners to grasp, but this is critical to your success as a trader. It's an edge in the market, an advantage in the market that will allow us to make a net profit over a series of wins and losses. Now, this topic will be discussed in detail in this video, but it will be mentioned for the remainder of this course, and you will use edge for the rest of your trading career. So please rewatch this video as many times as you need. Ask me questions about edge during our webinars. Leave your comments and questions in the comment section or reach out to me in Discord. Let's get started. So we talked about previously the law of supply and demand. We looked at exactly how the market moves up and moves down. And we've come to a point where we understand that we depend on the market makers, the large institutions, the large aggressive buyers, the large aggressive sellers to make money. And that there are a lot of initiatives that we have no control over. There are a lot of decisions that we have no control over. And it's hard to win 100% of the time because of so many dynamics that are happening in the market every day. So we need to have an edge. We will discuss now what an edge is in detail and what it provides us and how it will make us money. So one of the top consecutive 8-figure traders that I follow, his name is Lance Brightstein. He referenced this physicist when explaining what an edge is. And this physicist had a quote. It goes like this: the first principle is that you must not fool yourself, and you are the easiest person to fool. So he highlighted this because many people have beginner's luck when it comes to trading. Some people get funded by having beginner's luck. Some people even get payouts by having beginner's luck, because sometimes you can trade so much, let's say over a month or two, and you can take trades that just line up with the market, with the direction of the market. And you may think that that particular approach that you took to pass the challenge, or that particular approach that you took to get those few wins, is a system that is reliable. And oftentimes, as you start to digress, you may say, man, I had a 2-month winning streak, but now I have a 4-month losing streak. What happened? The reality is, those 2 months of winning were not based on a real system, were not based on a real advantage. Just randomness and probability lined up with you in your favor at that time. So what we want to do in this video is establish that you need a playbook, but the playbook has to have trades with edge. So here is a quote from Lance Brightstein. Most failing traders wrongly attribute their struggle to issues of psychology and risk management. Reality is, most have zero edge. They are naively fooled by randomness into thinking their wins are edge. This seduces them to troubleshoot the wrong problem. So he says, he gives an analogy. Many struggling are putting the cart, risk management, and psychology before the horse. Okay, starting with edge. Then when it doesn't go wrongfully, they think the issue is the cart. Both are important, meaning risk management, psychology, and edge. But if your horse doesn't work, no matter how good the cart is, you will still go nowhere. So this picture depicts the challenge a lot of traders have, but they don't know it. Many of them are putting psychology and risk management before edge, not understanding that the strategy that they are using, the patterns that they're following don't have edge. They're unreliable. If they go and try to validate those patterns over a significant amount of time, 20, 30, 40, 50, 60 trades, those confirmations that they're using, they will see that that edge or that strategy, for example, that particular strategy does not have edge. It will fail. So if you're using a strategy that doesn't have edge over 40, 50, 60 trades, then no matter how good your psychology and risk management is, you will still fail. And this is the problem. Many people don't know this. This is a subtle issue when it comes to beginner traders. So what is trading edge? So in layman's definition, is an edge is a strategy that gives you a profit advantage in the market. In order to earn a profit over time, it is necessary to use a trading strategy that has a trading edge to help the probabilities tilt in your favor over a series of trades. Okay, because we know we can't win 100%. So we just have to, we have to have some sort of strategy that leans probability into our favor so that over a series of wins and losses, we will win more than we lose and we will make more than we risk. Okay. Now, the technical definition, it is a trade or strategy that has a positive expected value, EV greater than 0. What is EV? Expected value is the probability, okay, of winning times the amount gained minus the probability of losing times the amount lost. So your probability of winning and the amount gained when you win has to be greater than the probability of losing times the amount that you lose. So if we break this down some more, first, let's just go back to the layman's term, the layman's definition. I use basketball as an analogy. So we have LeBron James in basketball. We have myself and we have Kanye West. So LeBron James, when it comes to basketball, would be considered an A+ setup. He has edge. He has a height advantage. He has a body advantage. He has 40 years, probably 30 years of basketball experience. He has 20 years of basketball experience in the NBA. He has the best training. He spends over $1 million a year on his body alone versus me, who played 2 years of organized basketball. Me, I'm 5'6" compared to LeBron at 6'8". Right. So if we just use basketball as an analogy, LeBron James has a huge edge in his favor if me and him were to go one-on-one. He has huge, significant edge in his favor to say that he will win over me based on certain variables. Now, Kanye West, we don't have any stats on him. So Kanye West in this picture represents the patterns, the scallop pattern, the bat pattern, the refrigerator, the potato salad, all of these different patterns that we learn and hear about and that people draw up. These patterns we have not validated. These are the patterns that are unknown. We don't know what they yield. We don't know what edge they have. So most people, they're either one, they have a pattern or strategy with edge. Two, they have a pattern or strategy that has little edge, that may be C grade. Or three, they may have a strategy that they have no idea if it has edge or not. So we want to, in order to become CPTs, we need to have a strategy or strategies that have proven edge. And every time you want to adopt a new strategy, you need to validate it, observe it, put it through a certain system, grade it, and then start to trade it. So I'll teach you all of that. But let's go back to the technical definition. So we know that probability, we depend on probability. So we need a strategy that is proven that, let's say, out of 10 trades, we win 6 and we lose 4, let's say, okay? So we win 6 here, okay? And every time we win, we gain $3,000 or 3%, okay? So 6 times 3%. Minus, okay, we lose 4 times, okay, that's our probability, right? We lose 4 times and we lose 1% per trade, right? So this will be 6 times 4 minus 4 times 1. This type of equation will give us a positive expected value. This will give us a value that will help us be successful and make money net in the market. So this is what having an edge is. Okay. Having an edge is a strategy that gives us an advantage, and we have to prove this strategy and we have to validate it. Okay. And we have to become good at trading it. So I want you to think about edge. Stop right now, pause the video and ask yourself, does my strategy have edge? Have I proven and validated that it has edge? If not, this is something you want to contemplate on, right? So it's hard to build and validate edge. That's a fact. It's hard to. And that's why we have such a high failure rate. That's a fact. Prop firms, when they're recruiting students, they brag on their technology, on their systems, on the automation that gives them an edge. The average retail trader doesn't have access to most of that. And the average marketing guru doesn't know what edge is. If they're not consistent, then they don't know what edge is. They just teach you patterns. So you need edge first, okay? So I'm gonna reiterate. So there's a book called Fooled by Randomness. This is by Nassim Taleb. And in the book, he talks about how he gives scenarios where he talks about how what is dangerous sometimes is when certain people have luck based on randomness. And then they try to tell others to take the same path. And what happens is the success stories normally rise while the failures are never heard of. So beginners make mistake by blaming their winning streaks on their strategy, while their losers are caused by psychological issues or risk management issues. This is what a lot of traders do. The reality is that their trading strategies do not have a significant edge. And the win streak that they had was caused by an inevitable variation, okay? A pure chance, not something that can be consistently relied upon. So this is what we want to build, a consistent edge. So now I want you to think about it. Just be easy on yourself. If before today you were winning and then all of a sudden you had a losing streak and you can't figure out why, be easy on yourself. If you passed phase 1 of the challenge, then you got to phase 2 and started failing, but you weren't sure that that strategy that you were using actually had edge in the given market conditions. Sometimes your strategy will have edge in certain market conditions, sometimes it won't. So we're going to clarify all of this in the course. So the prerequisites though, for edge to work, your instrument should be in play. Now we're going to use this language, in play, meaning that, so the definition of instruments that are in play. I got this from SMB Capital, Mike Bellafour. I got this language from him. I want you all to know that this is an industry and I study the best. I study the top. We should study the best. We should study the top in any industry, engineering, medical field, the law field, science. People reference other people. People learn from other people. People adopt the best things that they learn from other people. So you need to know the best in the industry. And I'm going to tell you and make you aware of the best people in the industry so that you can learn from them as well as we are in this journey together, going to higher heights. So in play, currency pairs, indices, commodities, cryptos are usually those that have high volatility. They have good technical patterns that you can see. It's not a choppy market. They have fresh news. They have macroeconomic catalysts as well. Like, for example, the indices right now, the interest rates are raising because of inflation. So I am expecting a huge drop. And I'm in the rally right now. I've been buying for the past few weeks because I understand that the big buyers, the big institutions, before they do a big, massive drop, a big, massive sell, they want to accumulate a lot of contracts. So when they sell off, they make massive profits. So I'm trading with the rally, but I am loading up on a few funded accounts. I'm loading up. I have a special account that I'm going to dedicate money to for the drop. So understanding all of these things are very important. And these are the types of catalysts that we should be looking for and understanding so that we can apply our edge properly when the instrument is in play. If your instrument is not in play, if the currency is not in play, then your edge will not work unless you have an edge for a choppy market. But I don't think anyone has an edge for choppy markets. So there are 4 general methods. So I've adopted these methods from SMB. They're one of the top firms in the United States. So the 4 general methods that they talk about are when it comes to edge. I'm not going to go in detail about them now because I think I've already established why we need the edge. But later on in the course, in the performance and training part, where I teach you how to validate strategies and how to grow your playbook. I want to talk about each one of these more in detail, but I just want to cover quickly. One method is observation, right? So actively just observing patterns, correlations, and price action each day. The problem with this is that it takes a long time to observe new patterns, right? Another pattern is just having a hypothesis, some logical idea, right? You may be aware of macroeconomics, things that are happening in the economy, social factors, things that are going on, wars are things that are happening. And you may have a hunch, you may have an idea that you want to test, right? The challenge here is it takes a lot of creativity and a lot of thinking, a lot of processing, a lot of testing. You can reverse engineer moves, right? So if you see, for example, if you see a big push with CPI, you can reverse engineer CPI news. And the good thing about this is that it has probably a high win rate. And also you can easily observe these types of moves. But the con is that sometimes there'll be false positives, right? So you may not go back far enough and study enough previous data in order to really understand if you have an edge, right? And then the fourth is mimicking, copying the pros. In this industry, it's best to be unoriginal. You should use strategies that withstand time. Supply and demand zones withstand time. The 4 market phases, they withstand time. They have been traded for years. So you've done a good thing by joining Zero to Fund It, because I will share with you my strategies that have edged, that have worked for me, that have allowed me to continuously pass challenges and get consistent profits. So you can copy my edges. You can copy the circumstances that I trade with US 30 and others. So this is one of the best, the fastest path, but it requires mentorship, and it's hard for most traders to access some of the top in the industry. So I'm going to share with you how to do each one of these. I have done them myself to expand my playbook. But in this video, I think we've already established the point, which is you need edge. Edge is the horse. Risk management, psychology, and performance are the cart when it comes to the big 4. So we have to ensure that the strategies that we are using, the context and circumstances that we are using them in, will give us an edge. So I want you to think about edge for the rest of our time together and for the rest of your trading career. Please leave your comments and questions in the comment section. Please reach out to me in Discord. See you in the next video.